Welcome back to the podcast, everybody. Episode 109 today. We're doing some election results reviews. I guess we can call this. We can even call it the third part of our White House walkthroughs if we really wanted to. But before we dive into it, as always, let's take a brief moment and thank our episode sponsor.
Hi, Chris Picciero here, founder of Teaching Tax Flow, co-host of the Teaching Tax Flow podcast, and pickleball enthusiast. Yes, if you listen to the podcast, you know almost every episode we talk about pickleball, the most popular and growing sport in America. We have tons of opportunities for paddles and pickleballs, but we don't have a lot of great gear on the market. Well, I'm so excited to announce that Sunsets and Dinks are now a sponsor of the Teaching Tax Flow podcast and produce amazing gear, not only to look at, but you feel confident on the court. Because you are part of the Teaching Tax Flow community, you get a 15% discount on all your orders with them. I know I love the gear I received, and I have quite a good record while wearing it. Believe it or not, even at my level. Go to teachingtaxflow.com/pickleball and simply enter TTF15 in the serve up promo code area of your paddle rack.
Hey everybody, welcome back. As you know, we had a big event that took place this week. That's right. We're recording this the week of the election. So obviously before you hear this or see this, it's going to be a couple days old, just given the nature of the content. We wanted to go ahead and put that out there. Some things might change. You never know. So why I say a big event on Tuesday, regardless who you voted for, the important part is you got up off the couch and you actually went out there. So if you didn't, shame on you. We'll deal with you in a different episode. But today, let's go ahead and talk about what we might be in store for. You know, we obviously did 2 episodes leading up to this, one looking at Harris and one looking at Trump. So obviously this one now, given the election has taken place, we have some results. Some of them are still in a little bit of limbo. But as far as for the presidential elect, or the president-elect, we should say, looks like we have Trump coming back into office. So Chris Picciero, welcome back to the show, sir. How are you today?
I am doing wonderfully, John. I'm going to miss all those random text messages and phone calls from the pollsters.
That's right. My mailbox is extremely happy right now. Let's put it that way. I don't have all this stuff.
It looked like the Sparty Cooper canine ticket did not win the White House.
Dog,
you know what? They gave it a good run, right? They took a bite out of it.
I know, it's good, but dog jokes. And if you guys don't know what we're talking about, Chris made a great joke a few episodes ago about our dogs that would be running. So, you know what would be funny, Chris? And this is not a dig at any politician or person, but I've never received so much consistent junk mail, political mail, in my entire life. If anybody needed like wallpaper, right? They could have literally plastered an entire house with as much stuff as we got this year. So.
For me, because I didn't get a lot of mail. I live in Tennessee. You live in Michigan. Most of the phone calls and text messages I received were people in Michigan, because I still have a Michigan phone number. And it really goes to show that Michigan was one of those battleground states where Tennessee was clearly neither of the candidates put too many presidential candidates put too many resources into Tennessee, just because Trump typically gets a 65 to 7, the Republican Party gets such a high percentage of votes in Tennessee. And then you could also flip it around in a state like California that is going to be exactly the opposite. I would doubt that the disbursement of funds for both presidential candidates probably didn't mirror the amount of constituents in that state versus the amount of money put into it. So my point is, John, since you're in a battleground state, or swing state, or whatever you want to call it, you probably had an influx of mail, phone calls, text messages more than I did. Because even when I got a text message, it was to the wrong person's name. Like a guy named Daniel a lot of times. I don't know what the heck's going on.
They got a hold of a fake number you probably had back in your 20s or something, and they have them updated to Sam.
So I still remember my old number, and it's been over 20 years. But let's talk about the election results. And our first reaction to it and what I think we should do tax planning wise. So today we're going to walk through the results. We're going to talk about what President-elect or former President Trump, both, I guess you would say, what his proposals were. We're also going to dive into some specific issues that are important to the teaching tax flow community. Then we're going to talk about something as far as, yes, these candidates can propose something, but what does it take to actually become a law? And then we're going to talk about the one current piece of legislation that is still hanging on by a thread and could answer some of the questions that we have here.
And this will be a good one too to run over. And again, I kind of like to throw myself under the bus in some regard. I hate to do it sometimes, but sometimes I have to. Where it took me a while, even after becoming, the age where I could vote, to realize that things are just boom. Day one, this is what I'm going to do. Everything's going to change. There's a lot of, call it checks and balances, whatever we want to call it. Just there's a process to everything, and there's a reason why it's there. It's great, right? Like if our dogs became president, everything would be there'd be dog food all over the place and chew toys everywhere. We wouldn't want that. So,
John, if the dogs became president, there'd be a lot of chew toys and food in the cabinet. All right, let's move on. President-elect Trump proposed, ultimately bigger picture, was the making the Tax Cuts and Jobs Act of 2017, which was passed in his prior administration, permanent. And those are the rules that we're living in now. So ultimately, the theme would be whatever we have right now would continue moving forward in general. And I've said many, many times that taxes right now are on sale. I've been practicing for 25 years in as far as a CPA, and these are the lowest all around marginal tax rates that I've experienced. So that now there are some tweaks that he proposed specifically that we're going to address, but ultimately the permanence of the Tax Cuts and Jobs Act. The other major thing he wanted to do is to put a significant tariff on all U.S. imports from China specifically. We're talking up to a 60% tariff. The state tax would still, or the state tax exemption would still be significant. We're talking almost $13 million. There are some things that there'd be some taxes or some. So let me take a step back, John. Ultimately, as a U.S. resident, U.S. tax resident, we're taxed on our worldwide income. However, both candidates actually tossed around the idea of not taxing certain segments of income. One of the principles of teaching tax flow is that, not the pillars, but one of the principles is that different income is taxed at different rates. Not all income is taxed the same, right? We say that all the time. And some of the things both candidates were thinking about really was interesting. Now, will these things get passed? We're going to talk about that in a few minutes. But some of the things that that Donald Trump was proposing was exempting Social Security benefits from taxation, exempting tip income from taxation, exempting overtime pay from taxation. It's funny, John, I was talking to a colleague of mine yesterday for a few minutes. One of the other, he's a tax professional and does a national speaker and all this stuff. And we're thinking, and I actually mentioned you, John, thinking about that tip income is tax free. What happens if the plumber comes over? He or she gives you an invoice for $5 and asks for a $95 tip. What's going to happen there? And then think about W-2 wages. The W-2 now is kind of complicated. It's gotten more complicated. But what happens if the employer is going to have to differentiate if overtime pay is excluded from tax? What pays overtime? Is it excluded from federal tax? Is it excluded from Social Security and Medicare tax? How much more complicated is it going to be from a bank standpoint when they're underwriting someone on their income, but not all their income is taxable on their W-2? It will further complicate things. So there's just so many interesting things that he's proposing.
It really, Chris, and something we didn't dive into on either of the episodes before is, it is related to this, but almost looking back and not like, hey, looking back to episode X that we've done, just from say we look back a couple decades ago, even say we look back 20 years ago, right? Just the technological advances and the way people invoice, get paid, the way tax stuff, all this stuff, right? It almost really does complicate a lot of it because there's a lot easier ways to get around it, but then also other things are easier, right? Like you talk about, invoicing, somebody asking, oh, well, here's this. Like say, for example, you gave the example of a plumber. He comes over, it's $1,000. All right, cool. It's a $10 invoice, but give me a $999 tip. Where if this, and this is just personal opinion, if this was the case and something like that did go through, say, 30 years ago, you would probably have a significant amount of service-based businesses go into cash and not reporting at all. Like, and who knows, that might happen anyways, but
yeah, I mean,
it's so interesting to see. It's, and even just the tips, right? Like and I've never worked in hospitality, and I probably should have. It probably would have given me a little bit more character, but those people are incredible. But yeah, that should be interesting. And I know on the Tax Foundation's website too, last time I looked at it from the episode that we did on both candidates and Trump specifically, I feel like they've added a couple things to their list that weren't on there when we spoke last time too. So maybe we can go through a couple of those items.
Yeah, absolutely. And the other thing before we dive into the specific items that are of most interest, is that his proposal was to take the corporate tax rate. Right now, it's like for C corporations is at 21% down to 20%. However, if you make your products in the United States, that rate would be 15%. So think tax for, if we're thinking tax planning wise and you're a small business owner, if the corporate tax rate's 15%, we might see more C corporations. Even though they could be subject to double taxation, we might see more C corporations than sole proprietors or single member LLCs, or maybe even S corps. And what happens, to further complicate things, John, what's going to happen with the overtime if overtime pay is excluded from tax? Let's say, and all serious, let's say you're a self-employed. Let's go back to the plumber, right? You're a self-employed plumber. You elect to be a C corp. You pay yourself a salary based on whatever you should be paying for someone with your experience, and you happen to work overtime in a week. The C corp's going to pay you and your corporation will get a deduction for it. However, you're not going to pay tax on it as the employee. So I wonder if there's going to be special rules for owners of the company in the overtime pay, similar to there's a lot of.
Honestly, that didn't even cross my mind when we were talking about before. That is an excellent point.
Yeah. So that with S corporations, there's special rules for owners of S corps that own more than 2% of the stock. So the point is, we're just pontificating right now, but that's what this episode's about. Like, gosh, okay, do we finally know where the heck we're at with this election? And let's dive in and look at what's getting proposed. And there's one huge item that the Tax Cuts and Jobs Act eliminated that now President-elect Trump said that he would bring back, which I think would be a big positive for many, many states. So let's just jump. So that's the 30,000-foot view for what President Trump proposed. We have an entire episode just on his proposals.
Yeah.
But as you know, we have an amazing group that the Teaching Tax Flow community supports, right?
Absolutely. And specifically to that's the Defeating Taxes. So it's our private Facebook group. I know we posed the question. I believe you had actually posted it on there just the other day. And again, if you were so excited about this episode and you didn't listen to the beginning of it, this is obviously recorded a few days before you get this live. So things might change a little bit, but we definitely thank those group members for putting out there some of the ideas, what they wanted to know most about in this. And again, things change. There's a process to everything. We might be doing a election recap in 6 months or 12 months and seeing where some things are at and what things change. So let's dive into a couple of those, Chris, if you don't mind, actually, if you have those on your end, where we might be able to pull into a few of those questions.
Right. So this might seem like a shameless plug for our private Facebook group, but we do ask questions. A lot of our top show ideas come from, and our content in Teaching Tax Law comes from that group. We have almost 2,000 people in this group. We might have more than 2,000 by the time you listen to this. So we asked the group, okay, we have the election results. We're going to record this podcast. What are the specific items that you are most interested in? And you know what? There were 3 main responses, and none of them surprised me. I think our community is spot on. If you're listening to this, just go to, and you're thinking, defeating taxes, how am I going to find that? It's easy. defeatingtaxes.com. Just go there and you can sign up. You can join the group. And we do have a lot of people, we do allow people to post in the group anonymously. We know that sometimes you might be talking about, it might not just be asking for a friend. It might be a legitimate tax question, but there is so much great information in that group. Anyway, back to the group. So what they were asking about were three things. The first one's going to be taxation of Social Security benefits and disability income. Right now, as it is, Social Security can be taxed and it might not be taxed, right? Let's think about the Social Security. When you are an employee, you put 6.2% of your check into the Social Security fund. Your employer matches 6.2%. Okay, that 6.2% you put in as the employee is after tax. You didn't get a deduction for it. You're putting after-tax dollars into the fund. If you put in money to a 401k, you would actually get a deduction for that, right? Mm-hmm. The employer gets a deduction for their match. And then you also have 1.45 in Medicare. When you're self-employed, you actually have to fund both sides of it. And you're putting, 12.4% into the Social Security fund, and you only get to deduct half of it. So ultimately, the employee, their entire contribution is after tax. Here's kind of the bummer. When you start drawing Social Security benefits, they started off not being taxable at all. Well, as life happens, tax laws change, Social Security started becoming taxable. And now, for many, many people, up to 85% of the Social Security benefits are taxable. And that's all based on your income. But I would say for the majority of retirees, 85%, I shouldn't say the majority, but a good portion of their retirees, 85% of their Social Security benefits are taxable. For some, 50% are taxable. And the threshold for having to pay tax on your Social Security is very small. In other words, so if Social Security is your only income, then it's not taxable. But I would say a good percent of people that are on Social Security disability, it's taxable up to 85%. So President-elect Trump said, look, I'm suggesting just getting rid of all federal income tax on Social Security benefits. To me, that seems fair. Why does it seem fair? Because we didn't get a deduction when we put the money in to the system in the first place. Like a 401k, we get the deduction. So I get it. It's taxable when you take the money out. So ultimately, he's proposing that that Social Security is really an involuntary Roth IRA. You put the money in, and whatever you get out, it's tax-free. However, unlike a Roth, it's not self-directed, or you can't control any of what it's invested in. So that's one of the things that's proposed, and I think that would help a lot of people out. Because like our parents' age, John, maybe they have a small pension, maybe they have other income, but they're paying tax on 85% of that Social Security income. So
right.
That's now. We'll see what happens. Vice President Harris, from my research, I didn't see anything on that specific issue. It doesn't mean she wouldn't, or the Democratic Party wouldn't support it, but I didn't see anything on that. So there's a reason I'm addressing maybe what she proposed, what she was running on, and what the Democratic Party kind of supported. We're going to talk about towards the end of the episode. Number two, bonus depreciation. You hear bonus depreciation all the time. What bonus depreciation is this: when you buy a fixed asset that is under a 20-year asset. So you're talking machinery, equipment, even commercial improvements, landscaping, computers, et cetera, et cetera, et cetera. And pretty much most things that you buy that are not either real estate or not goodwill or depreciated over 3, 5, 7, or 15-year asset classes. With bonus depreciation, it allows you to take a good portion of that outlay or that purchase in year one. So, John, let's say you bought a server for $10,000. Typically, you'd write that off, I think, over, let's say, 5 years. with bonus depreciation, you would get to deduct a big percentage of it immediately in year one. Right under the Tax Cuts and Jobs Act, bonus depreciation got taken to 100%, which is a huge deduction for small business owners or medium-sized business owners. And that bonus depreciation was at 100% through 2022, but part of the compromise under the Tax Cuts and Jobs Act was it got reduced to 80% in 23, 60% here in 2024, 20% in 25, and then rather 40% in 25, 20% in 26, and then it goes bye-bye. So that server right now, John, if you bought it today and you put it in the service, you get to deduct 60% of it, not 100% of it. And bonus depreciation is the backbone of cost segregation studies for our real estate investors. So we are in November of 2024. We are at the end of almost the end of the year of 60% bonus depreciation. We're steering 40% next year. And that's why having 100% bonus depreciation is something that business owners really support.
Just a giant shot of depreciation adrenaline right in the arm. Right.
Correct. So now President-elect Trump was aiming to extend the 100% bonus depreciation, which is set to phase out. And if they extended the Tax Cuts and Jobs Act or made it permanent, that could be a part of that. It also is mentioned as part of another pending piece of legislation. So if we restored the Tax Cuts and Jobs Act, what we think would happen is that bonus depreciation would go back to 100%. So that was asked in the Defeating Taxes private Facebook group, which is also the backbone of cost segregation studies.
Thirdly, if I can add to that really quick before we jump on to the next one too, if anybody sees it anywhere, because sometimes it is kind of a long name, if you see that TCJA, that's what that actually stands for, the Tax Cuts and Jobs Act. So, because
thank you.
Given the long name of it, sometimes you see the acronym.
Sometimes we rumble through. I'm guilty of that. The third major issue: SALT tax reduction. This is not stuff you put on your pizza. State and local income tax. So there are several states that have a state tax. So right now, if you itemize your federal tax deductions, you can only deduct up to $10,000 of your state and local income tax. So John, let's say you live in Michigan, you own a property and your property taxes are $8,000. That's not ridiculous, I don't think. Let's say you're a household, that makes $150,000 a year. The state income tax is $6,000. Or I'm sorry, the state income tax is 4%. I think it's 4.25%, but let's just say 4%. 4% of $150,000 is about $6,000. And then let's say you have some land up north and you have $1,000 worth of, property taxes. So my point is, let's say you're paying $15,000 worth of state and local income taxes, or you might live in the city of Detroit and pay a tax there. Even though you paid $15,000 of state and local income tax, you can only deduct $10,000 of it under the Tax Cuts and Jobs Act. So now President-elect Trump said, I want to make permanent the Tax Cuts and Jobs Act, TCJA, him and his people did say, asterisk, we're going to uncap SALT. Meaning, if you were in Michigan, you would then be able to deduct all $15,000 of tax. Now, put the hat on of someone in New York or California, where the same fact pattern would result probably in about $20,000 to $23,000 of state tax, and they're only deducting $10,000. So proposed repeal of the $10,000 cap would benefit a lot of those higher income tax states. And it could, and thus more people would itemize their deductions.
I'm going to have to take a clip from you saying that, because that's basically a recruitment campaign. I'm sure you're directing at me to move to Tennessee.
We would love to have you down here, but we get, you love it down here.
I do. That's why I come and visit you. And actually, we did an episode a while back on basically residency planning. I know we talked on that a little bit. So that's a new one. I know, Chris, I didn't even know, again, SALT, state and local income tax. So like you see the acronym. That's something I don't think a lot of people even realize. I mean, they realize it exists, right? But I don't think they really consider that as like, oh, well, I can control that. Sure, you can. You have a real estate agent that would absolutely love to help you out with that. But as you mentioned too, I think a lot of things, over the course of I could be totally wrong, right? It seems like you really get like a 4-month push where a lot of momentum's in, and then you kind of get a little bit of a window, and then things really start getting set into place. Like it's almost, we won't call it the honeymoon stage, but it's like, all right, you kind of come in, yep, this is our plan, this is how we do. What do we got to do to make this plan happen? And then it starts rolling out. So, of course, the only reason I think I noticed that is because it's, right around April, May, June birthday time. So
Well,
it just seems.
Yeah, so I think we would see a lot more people itemizing their deductions. We might see more people, if this happens, having a larger federal tax refund. There's a lot of things that would happen with the state, and quite frankly, I think if you're paying a tax somewhere else, you should probably get a deduction for it. I mean, that seems fair. I'm going to touch real quick on that. This is great. We've got a bunch of ideas. How does an idea or something proposed get into tax law? We had an amazing episode with a great guest from the Michigan Association of CPAs that we talked about. I think it was called the
How taxes are made.
how taxes are made. But
Absolutely.
so we have a whole episode on that. But let's talk on the federal side. Okay. First thing is you've got the House, you've got the Senate, and you've got the president. As of right now, obviously, typically you're going to have different parties have control of each of the parts of legislation, those legislator, right? So, and then a lot of times something just sits in gridlock. Right now, it seems apparent, obviously, that the Republican Party will be taking over as the presidency. It seems like they have taken control of the Senate majority. Right now, we are not 100% sure on the House of Representatives. It looks slanted towards the Republican Party, but there's a lot more counting, and there's, quite frankly, just a lot of more things to figure out. So we don't know where the House is going to be. I say that because obviously, if you typically want to have some type of bipartisan support for your tax bills, for them to actually get to the point where they're passed. And so, like, John, when we talked about that tip income being tax-free, both candidates were in favor of that. Social Security being tax-free, the Harris campaign didn't say any, or, based on our research on taxfoundation.com, the nonprofit bipartisan research center for tax proposals didn't say anything on it. So let's look at that. So typically, a bill has to be introduced in the House. If it's a tax, we're talking tax right now, it goes to their House Ways and Means Committee. The Ways and Means Committee drafts a bill, kind of figures out, the revenue generated, the cost of it, how it's going to get funded. They're kind of the underwriter of the bill, right? Just like if you apply for a mortgage, you have to go through underwriting.
Mm-hmm.
Then, once it's revised by the House Ways and Means Committee, it has to pass the House with more than a 50% majority. At that point, it goes into the Senate. Senate has their own underwriters. They're called the Senate Finance Committee. The Senate Finance Committee could look at the bill, like it, they could change it, they could modify it. And if they change or modify it, then it can go back to the House, right?
Mm-hmm.
Because it's eventually got to pass the Senate. The bill could flip-flop around, get rewritten, but ultimately, after it passes, gets back to the Senate, then the Senate has to pass the bill with a majority. But tax legislation has to have a budget reconciliation process. So it really, it's got to get underwritten. So the Senate Finance Committee has to underwrite it. If they're a lot of times you could have two bills, a Senate bill and a House bill, that are really similar. In that case, you're going to have a conference committee, if needed, of both of those underwriting, what we're going to call the underwriters. And then typically they're going to come up with a final version that they both, approve, and then the masses, that's voted on, and they're both approved by a majority. And then it goes to the president to sign the bill or potentially veto. But we don't, if it gets that far, typically we know that the president's probably going to sign it. Let's say the bill gets signed by the president. Then the Department of Treasury and Internal Revenue Service work to interpret the bill, create regulations and guidelines. Maybe they create new tax forms, and all sort of stuff.
And it's good to lay that out too, Chris, almost as you mentioned it and given kind of the recap, right? So it's House, Senate, sometimes that kind of volleys back and forth as needed, and then it moves along to a president sign off and then implementation. So I know some stuff, right? It almost seems that, it feels like some things are caught in that limbo, just that vicious cycle sometimes for years and years, and then it just kind of goes away. But it's good. I mean, as a U.S. citizen, it's nice to see that there's a process involved in this. Otherwise, people like we would come up with great ideas, but
right.
And they're not great ideas.
So we have a bill right now. I'm not going to spend too much time on it here, but it's been mentioned in our content, and that
Sparty's excited. I can hear your dog in the back. She's very excited about this. She's very excited. My dog
is, and that's
why so here I am.
That's not a good look. But we have a bill.
No, you're okay. I would say you would hear my dog all the time, except, having a 10-year-old blind basset hound who sleeps 23 and a half hours out of the day. He's not very active. And then when we do have to wake him up, it's a situation. So
that's all right. Well, yeah. So when we we currently have a bill called HR 7024, Tax Relief for American Families and Workers Act of 2024. Nothing might happen from this bill, but it at least gives us a window into where we're at as we transition into the new sessions next year. And this bill was proposed, by Jason Smith, who's a Republican representative in the state of Missouri, introduced on January 17th of 24. And this is the bill that there's a lot of talk about that had some bipartisan support, that would have brought bonus depreciation back to 100%. It would have increased child tax credits. There's just a lot of different stuff in this bill, but the main thing for real estate investors and entrepreneurs was that increase of 100% bonus depreciation, but also an increase of threshold for 1099s getting issued to independent contractors, so $600 to $1,000. Just a ton of different little things, child tax implications.
And we can't ask about the Taiwanese resident double taxation. I think this was in there, isn't it?
A staple in there.
Yeah.
And it did give taxpayers some flexibility when they're calculating their income credit. But the bottom line is, I'm not going to talk about this bill anymore because it's sitting there doing nothing. It did pass the House on January 31st, 2024. It went to the Senate at that time and bounced around and really never just kind of is still currently sitting there. Went to the Senate in March, and then in August they kind of kicked the can down the road again, and we don't know what's going to happen here. But the point is, you can see that just because it's one thing for someone to say, "Hey, I want to make Social Security not taxed," then a bill has to get created, and it could be a long time. And we don't know if this bill, the HR 7024, will pass the House or pass the House. We don't know if it would pass the Senate. We don't know if President Biden would sign it. So it might just do nothing, or it might become something. But that's the only real piece of tax legislation that's pending right now. And I guess we're going to see what happens. But
Absolutely. Well, as we mentioned earlier on in this, I mean, Chris, we talk on stuff like this all day long. So it'll be great to see where things, where some actions take place here in the near future and a little bit long term. So I think it goes without saying, we obviously love the support of our community, our teaching tax flow community from all sides, just giving input on what you guys want to hear, what you want to talk about. Chris has, to give him a big head here and toot his horn a little bit. His contacts list is 100 miles long of people across industries, etc. So if it's something that we don't have the best answers for, we're not the best resource. We're very, very good at finding the best resource. So do not hesitate to let us know anything you might be interested in us talking about, or if it's just a simple question, ask us. We'll get you the answer. So you have the best connection you could possibly think of, and that's just teaching tax flow. We let us do the work, go get you the answers. That's what we're here for. And as we like to close it out with, we'll see everybody back here next week, roughly same time. I promise, completely different topic. We got 2 really, really good ones coming up after this with some amazing guests. So we'll see everybody back here again on the Teaching Tax Flow podcast very soon. Have a great week.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.